We've talked about the balance sheet. Now let's look at an actual balance sheet. We've got the actual balance sheet for Walmart. Now you should say, how did he get his hands on the actual balance sheet for Walmart? And is it even legal for me to be looking at this? Yeah, remember we're talking about financial accounting. Financial accounting reports are reports released to people outside the company. Well, are you outside the company? Probably. Am I outside the company? Yeah. So we could be looking at this. I actually downloaded these reports from the archives of the U.S. government. Walmart is required to send in their balance sheet every single year. In fact, every 3 months they have to send it in. So here we've got it. So don't worry. You're not breaking any laws. We're looking at Walmart's balance sheet. Here's a listing of their assets. As of January 31st, 2012, on the left side, 2011 on the right side there. So there it is, their assets. Look at the first one, cash. Do we know what that is? Sure. Turns out we know what a lot of these are. Cash, $6,550, which I don't know about you, but my first insight from looking at this balance sheet is, wow, Walmart doesn't have as much cash as I thought they would. You know, I've got almost that much, $6,550, and they're a big multinational company with 10,000 stores around the world. Until you look up in the top left corner and you see the amounts are in millions. So this cash is $6,550 million. Okay, that makes more sense. So they got cash. We know what that is. That's an asset. Look at the third item down there, inventories. Right. We're not surprised that Walmart's got a bunch of inventory, $40 billion worth we see here. So what's the inventory? Inventory is the stuff on all the shelves in all the Walmart and Sam's Club's locations around the world. How much did Walmart pay to put that inventory on those shelves? $40 billion worth. So there it is. Look down in the middle of the screen. We see property and equipment, $155 billion. That's the amount that Walmart has spent to buy buildings and land and trucks and shelves in the store, the stuff that they're using not to sell to you, but to use in their business. That's called property and equipment. Total assets, $193 billion. You say, well, wait, not so fast. There are lots of other things here that we didn't talk about. Well, this is just an introduction to the balance sheet. Well, on another day, we can go into more detail, and I can tell you about all of these things. But today, we're just introducing them. So don't worry if you don't understand everything there. We understand the big items here. Total assets, $193 billion. That's the total amount that Walmart has spent to buy all of the assets it needs to do business, $193 billion. Now, just a quick word. You see this is January 31st, 2012. Why did Walmart choose that random date, January 31st, 2012? Why didn't they do it on December 31st, 2011? Why did they choose January 31st? Lots of retailers, Walmart and many others, choose to do their accounting on January 31st because on December 31st, they're just finishing up the holiday selling season. It's their biggest selling time of the year. The last thing they want to do is say, okay, everybody knock off the selling and let's get some accounting done. No. Wait until things have died down at the end of January. Then we'll do the accounting. So it's not uncommon for a retailer to do their accounting records after the end of the year, just like Walmart does right here. Total assets, let's remember this number, $193 billion. Where did Walmart get the $193 billion it needed to buy its assets? Well, here it is. It's the other part of the balance sheet, liabilities and equity. Walmart borrowed some of the money, and some of the money was invested by the owners, the shareholders of Walmart. So let's see. Take a look at the first item there. Short-term borrowings, $4,047 million. Short-term borrowings, do you know what that is? Sure, you know what that is. Walmart went to various banks and borrowed some money and said, we'll pay you back later. Soon, short-term. Accountants define short-term as less than a year. So these are loans that Walmart is going to have to pay back within a year. Second item, accounts payable, a little bit over $36 billion. What's accounts payable? When Walmart buys inventory from Procter & Gamble or Black & Decker or whoever else they buy things from, they buy it, they have it shipped to their store, they put it on their shelves so you and I can buy it, but Walmart doesn't pay cash. Walmart tells Procter & Gamble, listen, thanks, ship it to our store, we'll pay you later, 30 days from now, 45 days from now. So this accounts payable represents amounts that Walmart owes to its suppliers for inventory that Walmart has already received but hasn't paid for yet. Now, an interesting thing to do is just do a comparison in our minds. You remember what Walmart's inventory is? It's about $40 billion. Accounts payable is about $36 billion, meaning if If you go into a Walmart store, you stand right in the middle of the store and just look around, you're going to see inventory. Has Walmart already paid for most of that inventory? No. About 90%, 36 billion out of 40 billion, Walmart hasn't paid for yet. Most likely, when you pick something off the shelf at Walmart and put it in your cart and go up to the front to buy it, Walmart hasn't even paid for that thing themselves yet. It's an interesting way to do business. It shows that Walmart is very creditworthy. People trust them. Go ahead and buy stuff from us on credit, and you can go ahead and sell it before you even pay us. We'll trust you for the money. We're just doing some simple comparisons. The balance sheet contains so much good information. And we just learned something fun about Walmart just by looking at their balance sheet. Take a look down about halfway, and you see long-term debt, $44 billion. What do you think that is? I mean, short-term borrowing was loans they got to pay back within 1 year. How about long-term debt or long-term borrowing? Yeah, that's amounts that Walmart has to pay back more than a year from now. 5 years, 7 years, 12 years, $44 billion. So it's long-term borrowing. Keep going down and look at this, the largest single line item. It's $68,691 million. What is that? That's retained earnings. Let's remind ourselves what retained earnings is. That's the amount of profits that have been generated by Walmart that have been kept in the business and used to buy assets since the beginning of Walmart until this date. So from July 1962, when Walmart first started, until January 31st, 2012, when these numbers were prepared, Walmart shareholders have authorized the company to keep $68,691 million of profit in the business to be used for expansion. We see that's the largest single source of financing that Walmart has. Where did Walmart get the $193 billion it needed to buy its assets? Well, there you go. A lot of it came from retained profits. A lot of it came from long-term debt. A lot of it came from accounts payable. We see in the balance sheet both Walmart's assets and where Walmart got the money to buy its assets right here in front of us.